Welcome to TradeTheMBI.com. This is John. This report is for the 16th of July. Back from Venice, I was giving a nice little discussion with some private equity firms on the latest in algos, and here we will go through the numbers. It was interesting discussion because it was talking about continual change in some of the liquidity patterns of buyers and sellers in this market, and it's been an interesting one as I've been seeing develop. I've been making a couple of adjustments to the algorithms, unbeknownst to all of you, because within the DOC I'm able to make the alterations without it being a known quantity. It doesn't change how they interrelate to each other, just how their information is culled and translated. And that becomes significant because of what we're seeing in some of the unusual capital behaviors. And by that, we've been seeing some unusual activity is, I guess, the easiest way to describe it. Is that a negative thing or a positive? No, but it, from what my readings in the past are, reflects more of a, I don't want to say institutional, but even larger than that, governmental impact in the markets at this particular point, which is kind of odd, but not the first time we've seen it. Had the similar kind of readings back when 2009 rolled around and the Fed was getting more active in things. So it's just interesting to note at this particular time, particularly given the fact that we're heading into new equity highs here for all the markets, and it's starting to cause people to shake their heads a little bit. And that's perfectly normal because everyone's always in a state of disbelief, no matter where the market is. So you really can't worry about that as much as just having to go with what you have as far as reliable details, and our indicators have been spot on with this. Interesting. We've been in a little bit of a weak position here. We had the pivots up. It continued to move higher with the green by breaking over the previous high at the open onset of the action, and a little bit of a pullback now with this new open starting the morning. It's going to break out to a new high. That's relatively good. You still don't have red rising above red, though, so it's still a suspect move at this particular point. Not overbought any degree, but we're seeing a lot of this where prices moving higher on a lot of different stocks too, but not piercing above the stability of the red line there, and a breakdown from there could result in some significant pullback declines rather rapidly. In fact, while we're here, we might as well take a look at the 50K. It did sell out. Very funny too, because it sold out right here. It puts, I think it was like $100 short of new equity highs. But of course, you can see that currently in a trade, reestablished after the decline, got new buy signals, went formed. Deep red formed, but we did get an immediate cross of the green back above, and pretty decent, but almost overbought already. And that's a problem. And nothing shocking about this pullback, because all it did was come back and retrace the positive extreme that we talked about, that we said was going to get retraced. So no biggie there. It cleared overbought completely and allowed for a whole new reset of the price move, which is fine. Allows for a whole nother run. Of course, though, now you see it's got to get much further. And the likelihood is what we do is we're going to make a pivot down here with the red, and then we have to break past that previous one. The key will be to see if it stays above this lower pivot right there, and that will indicate the strength of any continuation on the move. So while this one may not survive in its entirety or just retest itself, the next move will be far more significant. So we'll keep that one in mind from a 5K standpoint. We'll put that chart up as well. You can see the move came down, started with a buy, and then first thing, it's already been taking off, but beginning to be overbought. And what's likely to happen with this is by the time we open, we retrace it, and then you look for intraday to pull back up to those highs. That becomes a very common pattern during a choppy Wednesday event. Keep that one on your radar. We'll go ahead and move to the NQ, which has been a little bit better, but not in this particular case, because you can see, though it made lower peaks, that's positive. You don't have the green pushing over, so just not seeing types of buyers, what you're just seeing is the opposite of what you would expect, where prices inflating on fewer buyers just because you're not having an add-in of number of shorts, and it may be just a capitulation of shorts not attempting to attack. And while that can create a euphoric kind of blowout, but it's usually a blowout top that ends up then attracting a whole new variety, and you end up with people taking profits and getting out, and that's what turns around and creates a sell that will satisfy this type of situation. With that rising red-white from the YM, we knew that the YM was going to be much stronger than all the others, and that's proven to be the case. You still don't have green, though, moving above red or white at this point. Now you need to, because white's now above red, and in that particular case, you're going to have to maintain a breakdown here, because if cyan pivots up, you're then going to have higher pivots immediately, and that will result in a significant pullback towards that ultimate target, which is going to be right down there, the down target 16,830. But I wouldn't quite be ready to sell those puts just yet, maybe in a little bit later in the day. And what's interesting about it is this commodity breakdown that we're seeing here. We've got oil that has just been plummeting, which suggests either a glut in the market or just some really poor economic activity down the road, or a combination of both, which in those cases we start to look at some of the other things, because if we had a hot economy, you would be expecting gold to be rising, and you would expect bonds to be under some pressure, but no, that's not great. You got the cyan just moved above red, still green is controlling in this case. That's about to come to a point, but key pivot there, and you could see new highs for Treasuries, AIG, special there. Again, not able to get over the green. Likewise with gold. I don't know how AIG got in there before we were doing our commodities, but gold retests its full positive extreme. So there's nothing surprising with that, despite what some people may think. But what's interesting about the meltdown here is that if you expected any type of real growth or anything, we'd be breaking out to even higher highs. So while there's turmoil, yes, that has an impact, but really the economic engine turning around and being positive would really skyrocket gold, because of the amount of liquidity in the market and inflation fears. So that's kind of a counterbalance to it. I'd still be long above that 125 level, which is kind of where we had that benchmark now that we've retraced the low. And then I would continue to reduce that if there's any further breakdown. And the euro started to look good, got to the key matchup point and couldn't even get close to passing it. Opened up with the wider DOC spread here between cyan and green, and sure enough, it just plummeted under that, and it seems to be continuing that fade at this particular point, which is an interesting one, because again, as I've pointed out, the ECB is a bit handcuffed at this particular point to do anything about the dollar with respect to it, because they're still taking so much liquidity from the US Fed in the form of dollars. X, obviously, the World Court ruling on tariffs, and that had a little bit of impact, most likely from there. But at the end of the day, we've just retraced where our magenta candle was, as well as the positive extremes. So from that standpoint, still holding up very nicely, though, within our EBM. And these readings, so a slight turnaround intraday, I think becomes still attractive for X at this particular point. CLF, interestingly enough, too, turns around to a buy setup. Not only do you have cyan candle, but you have a series of catfish fractals, and that was some pretty decent target rates to the upside. So be looking for that one intraday for those of you with the indicators. Looks pretty healthy. WLT, and just the opposite, where it started to spread and came close to getting a buy, but rejected it very quickly there. And still looks like it should project a little bit more weakness now that it's broken below that green level, and really don't have any significant pivots. You're going to have to break way all the way above here near your negative 7.5 for that to be any improvement. So not looking for that to do anything in particular. Apple, still liked it. Yes, we know we had some of the positive extremes. It's just more of the same, but still holding up very nicely within its overall configuration. Amazon, still looking good from there. If we get a penetration of that steel below, I'd be looking for the potential of some of these positive extremes to begin retracing. You'd have to see a little bit of an improvement from the cyan for that to start to take place, but that would be a time to start taking some gains on a few of these. Deep red, interesting to point out right there at this particular point. We just get a crossover positive, though, of the steel. Might support it just a little bit longer, but if that steel came back down again, that would be the opportunity to take advantage of a Baidu short coming into this setup. So keep that one in mind as long as the FAS have been doing well. We talked about that being the benchmark for wanting to stay long equities. Getting near overbought again. I mean, did the same thing back here. Now you're going to do it where people will start talking double top. Not really what that configuration is, but that's okay. You rarely find people who have a clear concept of what chart patterns really are and whether or not they're effective. That becomes a whole different issue that we can debate with numbers. Anyway, Facebook. We talked about it reached its zenith with some of those readings. It did come back over, but then again, Cyan moved back to the upside. So again, we should expect a little bit more weakness out of Facebook coming off of that pump. Got a little of a bump, but it sort of eased out off of that little decline that got retraced. So that wasn't too horrible. Nice rise of the red and white, but at this particular point, if green starts to even dip lower, I would expect a much deeper retrace and potentially right back to the dip below the red line over here. Google had been doing decent in our last few reads there, and continues got to get over the cyan, and if steel dips below the cyan before that green gets over, I would not be thrilled with sticking around in it. Wiped out a few stops on that little dip that it took intraday, but it was a nice 15-minute chart buy. Looked very good. And didn't like Netflix off of that setup, and still don't. PCLN has been doing nothing, finally getting close to the potential of what would be a buy. It had a nice dip right there with the pop, but you couldn't get green above red when that happens. Now, if I get the slightest hint of a dip of both steel and or green going lower, I would expect that to break down to the lows very easily. Tesla gave some nice buy intraday a couple of days ago, but now still within that deep red. We did get crossover here. You're at the key function right there where we're about to meet cyan and steel. So pivot here becomes critical. If you get a lower one from steel, I would look out for the lows to break. Obviously, we're expecting a retrace of the low given the dip below the red line at this particular point. Interesting, because if we get the crossover of red above that negative 7.5, I would expect that to provide some support to the upside. So we'll see how that plays out. Could be a little bit more complex. You can always stick with easier ones. And Twitter, yeah, I thought that was ugly from there, and it doesn't look any better at this particular point. So not worth messing with the ones that are not good, and going with the ones that have the better looking daily, at least, to give you an idea of where to lean from the intraday signals. So keep at that. As always, oh, you know what? I had done the changes. That's the deal. So let me go back to see if I have buy sells A on my 5K. Let's see. I've adjusted the A, buy sells A, where you're able to format, and the inputs then allow you to turn off the red as well as the green. I have to remember which chart I have has the let's see, maybe it's all going to be DOC paint. Anyway, I'll put that together for tomorrow's report so that I'll then be ready to send it out, and you'll be able to see what to do, and I'll show you on the screen where you just right-click for the format, and then it will give you the inputs. That's not going to help because that's the actual on DOC, where we have all these on-off capabilities. It just is the same thing, numbers on for red and numbers on the green pivots. So you'll be able to shut those down. As always, though, look for me on the private Twitter feed, StockTwits. I'm going to be programming the next few days at least to have all those put together, as including the ones for the ABM DO breaks of the different lines for alerts so that you'll have those capabilities as well, just to add to the functional use. Everyone's got a different flavor that they prefer. Might as well suit all of them. As always, trade well. We'll talk to you tomorrow.